Let's bring into the conversation Euro-Pacific Asset Management's Peter Schiff. Peter, gold is moving up once again. You are saying now that 60% of your personal investment account is in gold and gold miners. That was up from 50%, I guess, before the tariffs?
Right. That's not physical gold. That's just my stock portfolio.
Yeah, miners.
And I had generally tried to keep it around 50% gold stocks. But the markets have moved in the favor of mining stocks recently, and so that's taken me up above 60%. But I'm not paring back any of these positions because I believe we're about to see a spectacular rise in gold stocks. And the reason for that is that when gold hit 2,000 early last year, nobody even believed that it was going to go any higher. And you had a lot of firms downgrading the gold mining stocks because they thought gold had peaked. And the entire time gold rallied from 2,000 to 3,000, investors just expected the metal to fall. And so nobody was buying the miners, and nobody was even buying gold as an investor. It was all foreign central banks.
Let me just jump in because we're cycling through, Peter. We're cycling through the names that you like. We just showed Agnico Eagle. It's up 52% year to date. And it's hitting an all-time high today, I believe. Franco-Nevada up 43%. I mean, we could look. Actually, I mean, we're seeing these numbers moving. Yeah, about 43%. So gold certainly a big picture here. Yeah.
AEM on a price to cash flow basis, it's the cheapest it's ever been. Even though the stock's gone up more than 10x since I first bought it for myself, I think the stock is still cheap. But the point I was just trying to make is that investors are now going to have to come to the conclusion that gold's not going back down to 1,500. It's probably not even going down to 3,000. It'll probably be at 3,500, 4,000 before the end of the year, and it's going much higher than that. So gold stocks have to be repriced. And I think between now and the end of the year, these gold stocks could double or triple. So there's a lot of opportunity for investors to buy these stocks now. In fact, I'm telling my clients to not even buy physical gold. I've been recommending physical gold since before $300 an ounce.
Right,
now it's $3,230. But I think that the opportunity is so great right now. In fact, I came out with a special report people can get on my website, the best way to buy gold at Europac.com, where I'm really making a strong case that you don't even buy any physical gold right now. You got to buy these gold mining stocks before they really take off.
And Peter, we do want to just say that in the last couple of minutes, the White House has said the ball is in China's court. And over the weekend, the narrative was that China just holds chintzy cards, deuces, while the president has a royal flush. He's got the winning hand. This weekend, in fact, Sunday, you put out a post on X that went viral. So far, it's got 208,000 views and counting. And in essence, you said yesterday the White House released a list of electronics that would be exempt from reciprocal tariffs. But today, that would have been Sunday, Howard Lutnick said the reprieve is only temporary as the goods will soon be hit with the new tariffs targeting a broadly defined semiconductors category. Insane! Exclamation point. The White House says this is all by design. From an investor standpoint, how do you view the shape-shifting tariffs?
Well, look, I don't think this is part of their master plan. I think they're trying to make, lemonade out of lemons. But, Donald Trump has mischaracterized the relationship. China has the stronger hand, not the United States. China is the surplus nation. They have all the factories. They have the supply chains and the infrastructure, and they have the savings. They have all the things that we depend on and that we need. So China doesn't need us. They can consume what they produce. They can trade what they produce with other nations that have things that they want. So China has the stronger hand, not the U.S., they are going to be moving money out of U.S. dollars, out of U.S. treasuries. They're buying more gold. They're buying euros. They're buying pounds. They're buying German and European sovereign debt as opposed to the U.S. sovereign debt. We are in a lot of trouble as a nation because our deficit chickens are coming home to roost, and our years of living beyond our means are coming to an end because the world made that possible. The world lived beneath its means to subsidize the United States.